Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Welcome to Turnaround Tuesday. You got dollar down a bit. You got interest rates pulling back nicely this morning. The 2 years gaining a little bit of strength on the interest rate side. We'll talk about that in a second. Futures up around 1.5% on the equity side. Commodities looking pretty good, although nat gas is just weak. Things barely green still, even after Nord 1, 2 sabotaged or whatever happened. Anyway, a lot of the work that we use on the technical side says this is overdue, the bounce. We've been talking about it for a few days now. For us, in terms of putting money to work, if that's where you're inclined, there's still we have a preference for cash flowing equities. We talked about this on our webinar last week in terms of sectors we like: healthcare, pharma, within healthcare, pharma, med device. Med device could get a little lift here today with the dollar pullback. I think that's been a pretty big headwind for those companies. Agriculture, whether it's the fertilizers, even like a John Deere, although I would be careful. The thing I like about John Deere is I think the strength in the ag market is a secular one. I do think that you're going to see a cyclical pullback in prices of steel and raw materials for those guys. So I do like that setup. But, again, I would be patient. Energy, I think, looks interesting. We talked about Walmart recently. 56% of their sales are grocery nowadays. And if you can't help yourself and you got to buy a semi, Qualcomm would probably be the one I would go to. It's not my favorite, but it's the cheapest. One of the cheapest. It's got some of the strongest metrics of income statements, balance sheet, great cash flows, diversified verticals nowadays. So that one does look interesting. You get the dividend crowd that can jump on board that one. And Broadcom, you get people that like the Broadcom as well for similar reasons. Chicago Fed President Charlie Evans says he's a little nervous about raising rates too fast. I think that's adding a little bit of fuel to what we're seeing out there this morning. He is a non-voting member. In terms of this bear market rally, no one knows how long it can last. Watch the 2-year, watch the VIX. The 2 years are already been lifting off the lows in terms of interest rate this morning. So who knows there? If you want to get super cute and try a trade, Tesla's got a leaked email apparently that's suggesting that their Q3 vehicle deliveries are pretty robust. Might work for a trade. You've got every major moving average is around 290 to 295 in this thing. So if it breaks above that and we've still got a decent tape out there, this is obviously very short term. It could run a bit, right? It's just the simple truth. You've probably had bears that have gotten a little more emboldened in this name as it's broken below their moving averages. So if it does the opposite here in a strong tape, they're going to get a little nervous. And then that's it. Think about, I think you got to also think about the fact this probably isn't over. So the idea of buying vol, or however you want to express that, hedge, defensive play, I think that makes sense. Maybe not right here, right now, today. Maybe this thing has a 2 or 3 day run. Who knows? But I would take a look at that as well. Have an awesome day. We will talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.